On the day, the S&P/TSX rose 59 basis points, making it a week gain of 1.64%, although on the month they are still down 1.27%, and on the 3 months slightly negative. The S&P 500 had a strong day, raising 82 basis points. On the week, it's up almost 3%, but on the month, it is down 2%, although that reverses once you get to 3 months. The Dow had an even stronger day, raising 93 basis points. That makes it a week gain of 2.84%, but on the month, it has a staggering loss of 4.19%, although 3 months it is slightly up at 1.65%. The Nasdaq rose 90 basis points on the day, making a week gain of 3.17%. But on the month, again, it is down 2.8%, but the 3-month mark, it's up 3.5%. The FTSE rose 1.11% on the day, while the Nikkei fell 28 basis points, but is still up 1.83% on the week. WTI slightly fell, but is still slightly up on the week, holding at the $56 mark. The latest release of retail earnings may show that malls are continuing to die, while off-mall retail stores continue to have success. A research company called Retail Metrics released that earnings in the past has rose 3% for off-mall retailers, while mall-based stores dropped 29%. This can be shown with how well Home Depot fared yesterday, as well as Walmart raising their forecast, as well as other stores like TJ Maxx doing really well. While on the other side, you can look at how bad Macy's has done, as well as JCPenney, as they have continued to fall over the past month. In company news, Lowe's increased 10% today after their earnings reports. Now, this is after a 4% increase yesterday after the Home Depot earnings report came out. Largely, this is due to an increase in same-store sales of 3.2%. While Lowe's had a really good day, Target had an even better day, rising over 20% on the day. This comes with an earnings beat of $1.53 compared to the estimate of $1.43. The first Canadian bank to release their earnings this week was RBC. They actually missed earnings, but they had a relatively strong quarter with a personal and commercial banking increasing in volume, but the downside came from their capital markets division. They reported an earnings per share of $2.22, which was lower than analysts' expectations of $2.31. In general, this puts questions into whether or not the Canadian banking industry continue to see the levels of growth that they've seen in the past years. The Royal Bank has fallen over the past year. Their stock price has fallen about $4 over the 1-year mark, but they're not the only stock that has continued to fall. Another example of a struggling Canadian bank is the Bank of Nova Scotia, which, as you can see here, the stock has fallen almost $9 in the past year. The Canadian government has said that they are starting the construction of the Trans Mountain Pipeline. After purchasing the Trans Mountain Pipeline from Kinder Morgan last year, not much news has come from it. There's been some arguments between Alberta and BC over whether the pipeline can be created, with BC being partially against it. It's good news though that they are planning on starting it. They hope to finish it mid-2022, but there is still resistance against it, and that might slow down progress. Overall, this has been a pretty big blunder for the federal government and cost a lot of money. The Conservatives, although they're for this, are kind of saying that this has a lot to do with pre-election timing, as an election will happen in about a month's time or so. Canada's July inflation numbers came out today with a 2% year-over-year growth in inflation. This hits the Bank of Canada's target for 2 months in a row and is looking good for the level of interest rates that they set. Overall, the biggest increase comes from increase in airlines month over month, as the price of airfare in Canada skyrocketed in July. Now, a report shows that the U.S. deficit could exceed $1 trillion by next year. Now, this is pretty concerning when you consider where we are in the economic cycle, with concerns over the next recession happening pretty soon. With the Fed just recently lowering interest rates, and with already an extremely high budget deficit, it makes me wonder where they plan on going if a recession hits, and if it hits hard. Because generally what a government will do is lower interest rates and increase fiscal spending. but with the level of fiscal spending and the low interest rates are at now, there isn't a lot of room for the government to combat a recession in this market. Not only has next year's budget deficit expectations been increased, but so has this year's, with this year's raising 63 billion, and that they expect the next decade will be higher by 809 billion than expected.